questions. Thanks for jumping on. Thanks for joining us today. Happy New Year. We are back. This is our first one of the new year, Justin.
Yep, it sure is. It's nice to kind of be back and back in the usual routine, and excited to continue on with this series here, which I think is a very important one of no dumb questions, which is just questions that you and I get typically that kind of come up throughout a week, that we thought was very important to have, to go on here and film these so that people have it as a reference to help kind of debunk any misinformation that people are hearing there in the lunchroom or watching their kids play sports and that. So I'm excited to continue to do this year, and it'll be good. Hopefully, we can bring a lot of value to people and educate them in the right way and make them feel comfortable about their decisions when it comes to their mortgage.
Perfect. Perfect. No, so great stuff there. The first thing we want to talk about, and this is one that keeps coming up a lot, is service fees. What are the fees involved in a mortgage? And I guess the two things to consider on that one is your mortgage rate, and we're also seeing things that when we do that disclosure, and it's a question that we've got a few times is what is an APR, right? So you get your mortgage rate, and then there's a little bit of a service fee on top of that might be that APR. So do you want to maybe jump into what are service fees? What does that entail, and what does that look like?
Yeah, you know what? I'd like to take that a step further. I think one of the things that always comes up and that we often hear is, clients are coming to us and say, "How much does it cost to work with a broker?" And that's usually again coming from their bank, right? The banks will say that in a way to discourage you from going to work with a broker. And one thing is, I want to make very clear is 90% of the time, there is no cost to you as a client or to the client to work with a mortgage broker. The banks actually pay us, right? They pay us to bring them the mortgage. So, I like to make that clear out there is there's not a cost, right? So, in most cases, when we're dealing with a typical A type lender, there's no cost. The banks pay us. Where they start to come into some additional costs is when there's bruised credit. If we have to use an alternative lender or a private lender, they can charge anywhere from 1% of the mortgaged amount as a fee. It's a little bit of a higher risk loan. So they would charge a fee to do that. But again, the important thing to remember in all of those things is I love when people ask us that question because I know you run the same way, Adam. It's very important that the clients are well aware of those things up front. So that's an important question that I encourage everybody to ask, hear it from the horse's mouth is, what does it cost to work with a mortgage broker? And the answer should be, like I said, nothing. Or if you're going an alternative route or having to do something, you should know all of those things up front and there should be no surprises, right? So it would be, fully disclosed and highlighted, and you'll see those on the disclosure form, like you said, which is a form that we require to provide to everybody that explains what the cost is to obtain a mortgage. So it's not just the interest rate, if there's an appraisal that's required and then there's legal fees, those are all calculated and then they're annualized in terms of an interest rate, like you said, the APR. So the total cost of what it costs to acquire a mortgage. A little bit of a tongue tie there, but that's essentially where we're at from a fee perspective, and how it all works when you're getting your mortgage. So
Yeah, no, good stuff there. I know it's a question that comes up a lot. That's important that everybody knows that there are no fees. And in fairness, it is kind of funny that we're saying, the fees involved in getting a mortgage and how expensive it is to work with a mortgage broker. We used to be that guy at the bank, right? We didn't
we
know
we
that.
were we were.
We
I'm
didn't.
saying that as I used to use that tactic, like I said, to discourage people from going to a mortgage broker. So that's a good point, Adam. We're not saying anything here that we haven't or hadn't done in the past. We used it, and it was very eye opening when we came over, as into becoming a mortgage broker to provide better service and better options to our client. In fact, most of the cases over the longevity of a mortgage, working with us, a mortgage broker. Again, our job's here to save you money over the length of your mortgage, right? Where a bank is profit for shareholders, not profit for client. And it was very enlightening when we moved over to the broker space to really be able to realize that hey, this is client focused. We are here to help clients save money, and in doing that, as a motto within our business, as you share the same thing, is if we're continually able to show you how to save money over the life of your mortgage, it's a great relationship because you'll continue to come back to us, and it's a long lasting relationship with all of our clients. So it's something that's very valuable,
Well,
um,
that
and
key
great.
point there is that profit for clients, not profit for shareholders. I can't say the amount of meetings, and I was in management, but they're more like how much we talked about shareholder risk, profit for shareholders. Everything was about the shareholders. When we're on this side, we don't have shareholders. Our shareholders are our clients. Our shareholders are our real estate partners. We have to make sure our clients and our real estate partners are getting the best deals, and that there's not the hidden fees, and there is a lot more disclosures on this side. So there's a lot of key things that go into that. And the next one that we kind of talk about that we want to talk about today is navigating that pre-approval. We're heading into the spring. We're in the winter, but the next market that's coming around is going to be that spring market. There's a lot of people that are out looking for houses. Let's face it. There's been a lot of changes in the real estate industry. There's been a lot of change in the mortgage market. Rates are coming down. More people are out looking for houses. So that pre-approval is going to be the next thing that's going to be so important that you have. And we hear a lot of different things on pre-approvals, and going back to the bank, the bank, a pre-approval for somebody sitting in a branch is a non-revenue generating appointment. They want to get that in and out as fast as possible. So they're not taking the time to review credit. They're not taking the time to review your income documents. They're not taking the time to review everything. If you're going out looking for houses, there's nothing worse than going out, doing that little online calculator. It's one of the worst things you can do is do that online calculator, see what maybe you qualify for, and then after that, like, yeah, you're looking at houses at $600,000, but you don't qualify for that. But the online calculator said you did because it didn't take all your debts into consideration. It's so important that you're working with a professional when it comes time to your mortgage pre-approval to make sure that you have the absolute clear picture. You've got a budget built out. You know exactly the cost of that house, what it's going to look like, and how that pre-approval is going to look, because it's not just about do you qualify for the house, it's can you afford it once you move into it. We want to make sure that you have everything that you've got full disclosure, and we've totally built that in there, and we've got the right type of mortgage for you, right? And I think that's another big one too, Justin, right? Like when we talk about what's the right type of mortgage, for a long time it's been, hey, the 5-year fix is your best product. We're starting to see a little bit more push towards that variable rate mortgage, and it's becoming an option again.
Yeah, I mean, with all the spark in the news of interest rates and all of that, yes, the conversation's definitely coming back up a little bit more. It sounds funny to say this, and a lot of people don't realize it, but you know, there can be a bit of a strategy with what term you pick, right? Whether it's a 5-year term or a 3-year term or a variable rate, and it's really customizing the mortgage for what your goals are, financially. What you're looking to accomplish. So those are all things that we kind of highlight, in our initial calls, conversations with clients as to what are your goals? What are you looking to do? And we will create, a customized budget and show you the different options and explains the benefits of a fixed rate mortgage or a variable rate mortgage, right? A fixed rate mortgage is a fixed payment for the length of the term. You can
Yeah.
basically set it, forget it, and never have to think about it for the 3 years or the 5 years that you've taken that mortgage. Variable rate mortgages, there's really two kinds of variables rate mortgages, and each different lenders operate in a different way. Variable is a variable rate, so it will vary depending on when you hear the Bank of Canada is making rate announcements, all that stuff in the news. Bank of Canada has dropped interest rates. That really only affects variable rate mortgages, not the fixed rate mortgages. So when you see that, when people are talking about that, the variable, yes, they've come to be more of a conversation because people are looking at it because we anticipate or we're hearing that interest rates may continue to come down. Fixed rates are already lower than what a variable is. So when we have that conversation and we start getting into it with people, it's really explaining kind of what the risk is, how long do you think, understanding the cycle of interest rates. They don't stay low forever, they don't stay high forever. They really and they really kind of, there's ebbs and flows in it. So it's really making sure and understanding that people understand what they're getting into, and ultimately what's going to allow them to put their head on the pillow at night and sleep, because you should feel very comfortable financially, understanding where your mortgage is at. It's not something that people need to be afraid of if you're working with the right person and hear and understand what understand how the mortgage works and have the proper strategy, it should be something you feel very confident in, whether you're in a fixed or a variable rate mortgages, knowing the advantages and disadvantages and where it's all going to go. So,
And the key thing you said there is customizable, right? Not
yeah,
your custom mortgage is not built around the water cooler at work. Your custom mortgage is not built with your parents or with with friends talking about what it might be. The key is to have something that's customized to you, right? Do you love variable rate mortgages? And what are your investments in? Are you in GICs? Are you in are you playing the market? Are you playing the stock market? If you can't go to sleep every night, maybe a variable rate mortgage might be the best program, but if you can't go to sleep every night because you're terrified of what your mortgage payments are going to be down the road, a variable rate's not the best thing for you. If you're on a fixed income and there's a chance of that variable rate, yes, all the experts are saying variable rates are going to come down over the next year, over the next 2 years. We see a lot of different economists. RBC talked yesterday. We could be seeing another full 2% drop that could happen. Is that a good thing? Yeah. Could it go the other way? Absolutely. There's a lot
yeah,
of, there's a new president coming in. We're probably going to have an election here in Canada in the next little bit. Regardless of what side of those you're on, there's going to be changes. There could be a lot of changes in the market. What's going to happen with variable rates? There are predictions. Predictions are wrong sometimes. So it's about, what does your budget look like? What does everything look like that way to make sure that you have the best, um, you have the best program for or the best mortgage product for you personally, and that it's customized for you.
yeah, absolutely. Absolutely. So again, kind of leading in with costs and different things, we've had some changes that have kind of transpired over the last 30 days that have come into effect regarding down payments. So, what, Adam, maybe you can kind of touch on, we get this a lot. People always think that, first time home buyers, it's automatically 5%. But that's not completely true, right? There's
Right.
different guidelines that are there when you hit certain thresholds of a mortgage amount. So why don't you kind of talk us through and help our viewers understand kind of how down payments work and what minimums and how
Yeah,
it all
and
goes from there.
when you talk that minimum 5%, a lot of people do think that that's restricted only to first time home buyers too. Anybody can buy a house with 5% down or with the minimum down payment. It doesn't change if you're a first time home buyer or second time home buyer. There are obviously some advantages when you are a first time home buyer of what you can buy. But that 5% of the first $500,000, I think, is key. Everybody needs to know that you only can do, so that first 500,000, if you're buying a house for $600,000, it's 5% of the first 500 and 10% after. So if you're buying that $600,000, you have to pay 10% of that next $100,000, which is really key to know. Now, in terms of insured versus insurable mortgages, once we hit that 20% down payment, then we're getting rid of that CMHC, the Sagen, the Canada Guarantee Insurance, which is another cost that's involved in that mortgage. But once you hit that 20% down payment, that's where we can avoid those fees. Um, uh, didn't put the do not disturb on. Um, yeah, but once you hit that 20% down, that's where we avoid those fees. That's where we can get rid of our that CMHC fee. But the first 5%, when you're using that 5% minimum down payment, you are paying that CMHC fee. You're paying that Sagen fee, and it does go in increments. So whether you're putting 5% down, 10% down, 15% down, that number goes down, right? So the lower your down payment, the sooner you have access to the housing market. So the question we get all the time is, should I wait to save 20% down before buying that house? Which is always, if you have 20% down, obviously we want to use it. If you want, you can avoid those fees. We want to avoid that at 20% down. But if you have 5% down today and you find the house that you love, don't wait to save an extra 15% on your mortgage. That could be an extra 30, 40, 70, 80, $100,000 to save by the time you've saved that money, which is really hard to do today. Things are so expensive. By the time you've saved that extra 20%, you're buying the same house, right? And you're buying it with a smaller down payment because housing prices are going to continue to go up as you're trying to save that down payment. I think that's one of the things that everybody needs to know when you're looking for the house. If you have it, don't try and time the market. Don't try and wait for the proper down payment. Jump in, right? Start building equity.
For sure. No, completely agree.
And again, like your mortgage, you're not in that forever, right? We're doing a lot right now. Those clients that closed in 2023 when the interest rates were a little bit higher, don't think of that mortgage as you're locked in. Even if we're taking that 5-year fixed or whatever it might be, the 3-year fixed, we're working with a lot of clients back from 2023 that have that interest rate over 5.5%. That we're helping them save money. We're going back to them. breaking the penalty, breaking the mortgage. We've got a lot of those closing, in the last few weeks, the last few months of those clients. And I think people need to understand that you can terminate your mortgage, pay a penalty, and save money, right, Justin?
Yeah, like you said, we're doing a lot of that now, especially with anybody like that's taken a mortgage within the last 6 to 18 months ago, in the higher interest rates because they had to do it, and that's what was being offered. But again, it goes back to we're here for profit for clients, and we're here to monitor your mortgage through the longevity of that mortgage and identify opportunities to save money. And we're certainly seeing them now where, people do have higher interest rates are reaching out, seeing if they can save money. We're telling them to find out what the penalty is, and we're punching those numbers into, we're punching them into a calculator, and here's what the savings is with a lower rate versus what you have. We factor in the penalty, and it either comes out black or red. It either comes out that there is savings or there's not savings that are there. And in most cases there are, so it does make sense to pay a penalty and break the mortgage, right? When we have that discussion up front, people are a little reluctant, like, oh, there's a penalty. And like, well, time out, place the call, let us do our thing, and then we can make an educated decision if it works out. And if it's saving you money, it does make sense to do it, right? There's a little bit of homework. You got to provide us the documents again, which can be a bit of a nuisance. But if you're saving $10,000 on the remainder of your mortgage, and it requires 2 hours worth of work, that's $5,000 an hour for the work. I mean, I'm not sure who's out there making $5,000 an hour. So it's well worth it to have those conversations, and see. And if it doesn't make sense, we'll be the first person to tell you that, hey, this doesn't make sense. You're in the best possible mortgage for yourself today. Stay there, and if give us a call, or we'll reach out, and we'll continue to monitor the mortgage. But at least we've gone through the exercise, and that you're in the best possible mortgage for yourself today. So
And it's a quick calculation too. It doesn't take long. We can run these numbers in 10 minutes to see, can we save you money or not. So if it is something that you're interested in, if you do have that interest rate over 5.5%, there is a huge opportunity to save money. Don't wait. Just reach out to us. Give us a call. Send us a DM. We can run the numbers on this calculator. All we need to know is, what's your amortization, what's your term, what's your interest rate. We can give an estimated calculation on what that penalty might be. We'll call the lender to find out exactly what it is. But then we're done, right? And it might be, we're going to give you one of two answers. It's going to be either, yes, we can save you money, or no, not right now, right? And we have some that are not right nows. We've got a few that, hey, you know what, the savings aren't enough. We think there's more opportunity for savings that might be coming down the road, depending on what that situation looks like, and we can save you money down the road. We'll keep it in our calculator. We'll continue to monitor rates for you. But the worst thing is obviously, I'm sure everybody's called their cell phone company, everybody's called their cable company, and found out that they could have been saving, $100 all along. There's nothing worse, right? We've
nothing
all
more
done it.
frustrating than that. Nothing more
It's
frustrating.
oh, it's annoying. Now take that from $100 cell phone bill to a $500,000 mortgage, right? The savings are just going to add up that much faster, and it's more important to make that call, right? We've all put off the call to upgrade our cell phone, to change our cable, to do whatever it is. We've all put that call off because it's only a couple $100. When it's your mortgage, we're talking thousands, tens of thousands. We have some that are saving $15,000, $20,000, and then on top of that, some of them we're rolling in some of that credit card debt. We're making life a lot easier. We're saving clients money. People got kids going away to school. If you need to roll all those in, it happens, right? We're doing these for a lot of clients. There's a lot of savings out there, and all it's going to do is make your life a lot easier.
For sure. So in terms of costs, one of the things we also get asked a lot, I've had a couple people this week is, everyone kind of focuses on what does it cost me, and they think it's the down payment, and that's all there is there, and they can get some surprises, when they get to the lawyers and understand that there was additional costs that are involved in getting a mortgage or buying a house. So Adam, you want to highlight some of the costs, that other costs, or I wouldn't call them hidden costs. I just think that there's a lot of mortgage people out there that unfortunately don't disclose those, and it can come as a shock to
Mhm.
clients. And I know I can speak for both of us. It's something important that we lay it down to the penny what the costs are, so that people understand what it is, and make sure that they're making financially sound, educated decisions based on understanding all of the costs to get a mortgage or buy a house. So do you want to go through some of the costs that some people don't consider or don't think about when they're purchasing a home?
Yeah, I would say there's a lot of different costs that are involved in that mortgage that people don't know. There's the down payment. We talked about down payment already. There's the lawyer fees. Lawyer fees go up. Lawyer fees go down. I will say with that, don't choose the cheapest lawyer, right? Find a lawyer that's going to do this that's going to do this properly. You want to make sure that you have a lawyer that understands everything involved in this transaction, because it might cost you a couple $100 now, but it'll save you thousands down the road. And a lawyer is not just a lawyer. They're, one of the biggest costs that we see all the time. We used to see it all the time in the bank. And back then, if we're looking 5, 10 years ago, it's the PST or your taxes on your home insurance, on that CMHC fee. If we're looking back 5, 10 years ago when we were doing first time home buyers, we're buying a house for $200,000. That CMHC fee was a little bit lower. The taxes on that CMHC fee were significantly lower. We're looking at a couple $100. We would have it all the time. People would get to the closing table, they get to the lawyer's office and find out they have an extra $300 or $400 fee. Not a big deal. There was always a way to find that out. If you're not laying those out, if you don't have those explained to you now, all of a sudden that fee on a $200,000 mortgage, your CMHC fee has gone from a couple $1,000s to $10,000, $20,000. The CMHC fee on that one, the taxes that you're paying up front are a couple $1,000. That's a lot harder to come up with, on the day of closing. And I'm sure everybody's done it. When you're closing, you're spending more money than you're ever going to spend in your life. There's money on, you've got your money on your appliances. Sometimes you've got moving expenses. There are a lot of things that go in there. It's so important that you have that budget and everything is completely laid out for you, so you know exactly what all of your costs are, what all of that looks like, and in advance going into it, so you can build that plan out. And that's one of the things that we do with our budgets. You get that custom budget, and we don't just do it one time and say you're gone. We build it for every single house, because you need to know on every house what that budget might look like, because property taxes change, houses go up and down. There's a lot of different things that you need to know. Sometimes you cross that threshold. If you're going from a $400,000 house to a $500,000 house, those budgets all need to be changed and customized for every single property.
Yep. Sorry. Yeah, you're right. I think I think one of the things that, again, I'll speak on both of our houses, that I love that kind of sets us apart is making sure that everybody understands all the costs and that there's no surprises, right? It's something that's extremely important to make sure that everyone's, again, like I said, making a sound, educated decision, and understands there should not be any surprises in terms of cost when you're purchasing, right? You should know all that stuff
Yep.
up front. That's really important to know. So
So, hey, that's all we got for today's show. Thanks for everybody that joined. I know we've got a lot of people jump on and off here today. But if you're looking to buy, get a pre-approval. Let's make sure you understand all the fees. We've talked about those. If you have a mortgage, let's make sure you're in the best product. If you want to reach out, run that calculation, reach out to Justin or I, send us a DM. Give us a call, reach out on our websites. There's all kinds of information out there. Make sure that you are in the best mortgage, that you're not costing yourself thousands of dollars. And if you're looking to buy, get that pre-approval, get your budget built out, make sure you know exactly what you're going into, so you can be confident when you move into that house, that you know the budget that you're going to be doing, that you know your budget, you know what your costs are going into it. So thanks again for joining. Thanks, Justin. Another great show today. We'll talk to you again next week.
you bet.
Awesome. Make sure you subscribe so everybody knows what you'll subscribe to our YouTube channel, subscribe to our Instagram, stay up to date on all the latest tips and tricks. Thanks for joining, and we'll talk to you next week. It's done. Well, there we go.